Hey everyone, it's Nick with Us versus Herd. Today was a kind of a dumpster fire for me personally. Closed the day down $1,300 in realized loss. $1,300 in SLV and DoorDash came for me and my account today. But you know what? That's part of the process. I mean, I'm going to explain to you kind of what happened, what I look forward to tomorrow, along with GME. But if you made money, comment below. Got paid. If you lost money today, comment below. Learned a lesson, and give me a big thumbs up for the YouTube algo. Definitely appreciate it. Trying to be transparent with you and what I'm doing here day in, day out. And if you want to join the UVH fam, links are below in the description to our Discord and our options trading group on Facebook. So first off, let's talk about SLV and kind of what I did. I mean, even though, you know, I was in leaps. Let's talk about that. Let me just pull this up here. So SLV, I was in leaps, but the mistake, after hours, I realized the mistake I made, and this is why I exited. Okay, SLV, the main reason why I exited SLV, and I was reviewing this yesterday, and you kind of look at, you know, kind of where SLV's been. You know, obviously there was some hype and stuff like that. There was a couple of things. The number one reason why I traded this was due to the breakout of the bull flag, which is now failed. That's one of the reasons why I exited. The breakout failed, so that's why I exited. But the second thing is, I bought implied volatility. This chart down here is measuring implied volatility, this blue line in here. And I bought at nearly a yearly high yesterday. Implied volatility was super rich. So even if let's say SLV went my direction and came down or went up, implied volatility was coming down, and that would have hurt my position. So even if SLV bounces up tomorrow and goes to the moon, implied volatility is impacted. I bought when implied volatility was high, and this is kind of the dangers of buying premium when you have high implied volatility. This is why, you know, people in Gamestop and AMC and all those other stocks, meme stocks, are getting hurt, is they bought when implied volatility is high and not seeing the warning signs of when it's time to exit. So I said, hey, it's not going to expand. Implied volatility is going down. As you can see here, last time I did this, it expanded up and just came trailing all the way down. And that looks like to be the same, even though this was a bit more drastic. I mean, I really wish I had more of a trailing down, a trailing implied volatility downwards like this. But this was straight up and then basically straight down. So that's why I exited my SLV position. Is now no longer looking like a good trade. Not because of the hype and all that, is because technically it is still in this bull flag, this little box here. It tried to break out the box, did not break out the box, and this is why we're still here. My DoorDash position, the reason why I exited DoorDash, I was in, you know, took another $730 loss on that, and the main reason for that is Uber. I mean, just kind of one thing after another today. Uber bought Drizzly for $1.1 billion, which hurts DoorDash. Obviously, DoorDash is a competitor to Uber Eats, and Uber bought Drizzly. DoorDash passed on Drizzly, and Uber snatched it up after, you know, they're trying to grow this business as you know, with the pandemic and food service and all that, and everybody staying in and ordering out. You know, Uber had an amazing day. It was up 7%. Meanwhile, DoorDash lagged, and now I still like DoorDash. It didn't trigger my alert. I mean, DoorDash down 4%, 5%, which is, you know, it's pretty healthy. It's a pretty healthy down day. And normally I would be a buyer here, but I mean, we're literally, if this breaks, it could come down. It could come down really hard and really fast. That's why I exit. So I'm like, okay, there's going to be another opportunity in DoorDash. I don't need it now. I mean, DoorDash is a stock that has been paying me pretty decently. So taking a loss on it, I'm not hugely concerned, but I didn't want the losses to keep mounting. So right now, I'm still going to be looking for a position in DoorDash. I'm going to see what it does with this news. Just because Uber Eats bought Drizzly doesn't mean that it's going to immediately impact the company or its competitors. It's going to take some time, stuff like that. And well, who knows? Maybe DoorDash will have some news. Maybe maybe there was a reason why they passed on Drizzly. I don't know. So I'm going to see kind of what happens here. If this breaks down, I mean, it's been getting saved, as you see. I mean, it did hit a high of 256 and came all the way down and just got obliterated. But, you know, what I liked about DoorDash at the time is kind of pinging back between pretty much sitting at 185 the whole week, and then it broke down today, which is why I exited. So I'm going to okay, if this gaps down tomorrow, I'm going to try to see if the momentum starts to shift. I mean, I bought DoorDash down here, made a nice bag on this leg up. I was looking for it to consolidate and do something similar back up to like the 230, 240 area. But apparently it doesn't want to do that right now. And then with the Uber Eats news, definitely made it a difficult play today. And that, it kind of is what it is. Alibaba, I'm down on that. Now, I didn't sell that position. That was it's been years since I bought premium on before earnings. Normally I don't, but I figured Alibaba's undervalued. I think that Alibaba, came back to 260 prior to earnings, and it had a nice setup for catapulting to the 280, 290 area. Alibaba beat on earnings, and they also said that their cloud business is going to be, profitable for the first time ever this year, starting March 31st, most likely. But, the market sold them off $10 or almost 4%. What I do like about this trade, this is why I stayed in it, is it's literally sitting at the 50-day and the 200-day. Right now we're just kind of sitting here. So if it can make a move off of this, I know today was a difficult day to hold. It was a difficult day, but right now I'm going to see I'll probably average down if we're going to get a bounce. If not, if we cut below the 200-day, probably just cut it and say, it is what it is. You learn from it. When you're trading, you're going to have days like this where you're like, man, whatever you did, it's just not working out. And you have to identify where the issues were. Where were the issues? Me, SLV, bought premium when implied volatility was too high. Should have been a premium seller. DoorDash, I don't think there was really much I could do about that. Alibaba, what I could have done about that is bought after earnings if I wanted to buy it. But I thought I was going to leg up before, for earnings, because I thought earnings was going to be good. Earnings was good. However, they're still under that whole thing with China, and maybe there's just uncertainty with all that's going on with it legally. In China with what they want to do is splitting the company up. Maybe that's what it is. Who knows? But, out of those three trades that I lost on, Alibaba could have not bought ahead of earnings, bought after earnings if I wanted a position, because I still like it. I still like where the stock's at. DoorDash, I don't think there could be anything I could do about that. And then on SLV, should have been a premium seller when IV was high, not a premium buyer. So, kind of is what it is. Disney today, I got rid of this put. This call today. I actually sold it open and actually mooned. And kind of like if you follow along with me on Disney, and you're like, hey, why did you sell so early? Now Disney, in the last week or so, I'm up about $500 on Disney. I put on the first call. I was trading, as you can see here, February expiration, 170 strike. I bought it on January 22nd, and Disney went basically straight down. And then once it kind of bottomed out, I bought another one at average down. So my original one I bought for $8.30. The second one I bought for $4.25. So it was a 50% loser at the time. Bought another one for $4.25 to average it down. And then the next day, this was January 27th, I averaged down. The next day, January 28th, I sold this one for 98%, almost 100% profit, and I held on, and then I made another $90 on this second one, is why I exited. So overall, the play was very good to me. My thoughts were for Disney, it was a pre-earnings play on Disney, and I was realistic. I was trying to be realistic. I thought it wasn't going to go higher than 175. So when it hit 174, 175 today, I sold it was like 174.50 today. I'm like, that's good enough for me. I'll take my $90. I already made money off the bounce when it came down to here, crossed on the 50-day, and then bounced back up. I caught the move, and then I caught a little bit more today. So I'm not mad. I left a couple $100 on the table. In all, it met all my goals, and I just have to be more patient in this market. And I think the market in general, just kind of spiraled out of control. There's things going on in my personal life too. So you kind of have to scale back. Now, this is one of the things that we've been saying for a while, is just be very careful if you're going to be trading GME or you're going to be trading AMC or any of these stocks. These went straight down today. Mr. Diamond Hands Dave Portnoy lost $700,000 today. He then went to blame Robinhood and Vlad and say they stole it from him and should be in jail. Listen, I just showed you my losses for the day, and I know it's not 700,000, but 1,300. I mean, it's respectable. It's not gonna ruin me. It's a little scratch on the surface, which I'm sure 700,000 to Dave Portnoy is just a weekend in Vegas. Okay, but I can't take this GIF. But if you're going to blame anybody for your loss, you should look into the mirror, like I'm looking into the camera right now. It's my fault. It's Dave's fault he lost money. It's your fault you lost money. It's my fault I lost money on SLV. It's my fault I lost money on Alibaba. It would have been my fault if I traded GameStop and I lost money. It would have been my fault. Wall Street Bets, it's your fault. It's not the establishment's fault. You put the trade on. You took the trade off. Or if you didn't take the trade off and you're holding, then, I mean, it is what it is. You control it. You're controlling when you put a trade on. You can control when to take a trade off. You can't control what the stock does, but you can control your risk otherwise. You control what you do with your portfolio. Nobody is saying, hey, you need to go in this stock and you need to do this, you need to do this. No, you're putting the finger on the trigger every time you hit buy. And also sell, right? So if you go to sell, I mean, that's you. That's nobody. Nobody's telling you. And if you're listening to investment advice or anybody like that, like for me, this is about sharing my process. I don't want you to invest off of what I invest, and you shouldn't. You shouldn't invest off of what Dave's investing in. You shouldn't invest in what Elon Musk is investing in. You just shouldn't. Do what's best for you. We all have different portfolio sizes. We're all different financial status. We all come from different backgrounds. I mean, we all have different emotions, risk profiles. I mean, the whole thing, everything is different. Okay. So do it for yourself. Don't do it for anybody else. Doesn't matter if this guy next to me is making bags of money and I'm not. It doesn't matter if I'm making a lot of money and the guy next to me is not. It doesn't impact. It only impacts you and what you do with your portfolio. So, for those that are holding GameStop and AMC, I mean, I've seen the comments. I've seen people be down. People have been messaging me like, man, I'm down 50K. I'm down 100K. I'm down 10K. I mean, if everybody, this channel is called Us versus Herd. Okay. If everybody is in on the trade, I mean, is it really going to make everybody money? Right? I honestly was waiting for the rug pull. I mean, you're like, well, it's still $87 stock. This is true, but it's not looking good. It's not looking good. And like, well, Volkswagen went down before it went up, and sure. I mean, maybe it will. Maybe it'll squeeze. But I do know, I can guarantee this. Maybe it'll squeeze back up, but I will guarantee this. There's a bunch of bag holders in here that are feeling the pain. And even if it does squeeze back up to 500 or maybe even 1,000, it's coming back down eventually. It's coming back down. Everybody knows it. We all know it. It's just what it is. I mean, at some point in time, it just can't be held up. I mean, a lot of institutions bought into the short squeeze too. I mean, it wasn't just Wall Street Bets. It wasn't just Reddit. It wasn't just individuals or retail traders. I mean, if we look at the, let me take a look here. Let me show you real quick here. GME. Now, if we look at the data here, if we look at the data here and we go to the activity, and this will show you options flow and sweeps and all that, and you can search. There was this could be interesting, $1 million call order for February 19th for 125 strikes. So apparently someone put $1 million behind, but you don't know but I can guarantee you, I mean, maybe they're hedging the position. Maybe they're short and they want to hedge with some calls. Okay. We don't know the reason why this person bought $1 million worth of calls, but I can tell you something. The retail trader is most likely not putting up $1 million right here. And there's so many, you can go through all these orders here, all these orders. I mean, here's another $1 million order. Here's a $6 million put order. I guarantee you, these are institutions. These are not retail traders putting $6 million orders in, $1 million orders in. Guarantee it. You can check the flow here. You can go through all this if you want. But it's in our UVH Academy Discord. Okay. If you want to go through the flow, or if you're signed up to Black Box or Cheddar Flow or any of that, you can go through it. I don't need to tell you how to look up option flow or what, but I can tell you right now, Wall Street was in on the squeeze. The orders show it. The order flow, blocks and sweeps, they show it. Okay. So we'll see what happens, but just be careful. Use proper risk management. I mean, AMC down too. I mean, this is why I exited yesterday. I mean, sure, could AMC bounce here? Absolutely. But now it's down to more of a reasonable price. Came down to 6 today, bounced back up on AMC. It was heading that way before the major short squeeze. It was heading that way anyways. It was heading back up to 6. It was heading back up to 650 anyway. So it obviously the short squeeze kind of changed things, and thankfully, AMC was able to raise capital through this. They were able to save their company from bankruptcy. They were able to keep people employed through this. So if that was the reason for it, then congrats. I mean, GameStop, I don't know why they're not raising money. Honestly, I have no idea. I mean, I don't know what GameStop is doing. And GameStop's probably like, I don't know what's going on here. But anyways, Amazon also posted earnings too. Jeff Bezos is going to be stepping down. They smashed earnings. They killed earnings. And, the question is at 34.28 right now. Is this enough to break him out of this right in here? Been consolidating for about 4 or 5 months. I mean, we'll kind of see what happens. Google also killed earnings as well. I mean, just obliterated. Is up over 100 points, 150 points, 140 points right now. So this is looking like a very bullish breakout for Google. So I'll be looking into that tomorrow. So I'm not going to keep you. I know I ranted a little bit. If you watch this video to the end, comment, watch to the end. And as always, stay safe, stay green. It's us versus herd.